I've been in finance for over 30 years. I've done everything from debt management to wealth management to lending. So I approach mortgages and debt management and credit in a very different way than many people who have just worked in one discipline. As you know, your home may be at risk of possession if you do not keep up your mortgage repayments. So, very simply put, you have to think about it. Every single mortgage is going to come down to three things. I call it DIC. So it's going to come down to your deposit, your income, and your credit score. So your deposit, your income, and your credit score. We'll talk about strategies that we can use to improve each of those things. We'll be talking a lot about your credit, but we'll also be talking about the deposit and the income. Utilization. I've talked about utilization a little bit. So utilization is essentially the amount of the available credit, the amount of your credit limit that you're utilizing, therefore the utilization. So in the example before, you have £1,000 credit limit, you're using 500, that would be 50% utilization. Now, if you're using platforms such as ClearScore or Credit Karma, it will talk to you about your utilization. But when they're talking about your utilization on some of these platforms, they're talking about the cumulative utilization. So that means, to keep the numbers easy, you might have 5 credit cards. Each of them has a credit limit of £1,000. On one credit card, you're using £900, and another credit card, you're using £800. But the other ones, you are using nothing. Your utilization will be based, your cumulative utilization will be based on those 2 cards. So your utilization will be low as a cumulative number. However, those 2 cards that you have over 50% are going to go against you. So a better strategy to improve your credit score, which could improve it by 20 to 50 points within 3 months, would be to make sure that the balance is spread across all of the cards and all of the cards' utilization is below 10%. So it doesn't make sense having 1 or 2 cards that the utilization is really high, and then you have other cards that there's a zero balance on. So your utilization is not just about the cumulative, it's about the individual card. So a strategy that you might want to use, as I said, if you have multiple cards and some of them have a zero balance and you're in a situation where that credit card company is maybe offering you a 0% balance transfer, transfer a balance onto a card, keep all of your cards below a 10% threshold. A strategy overall for getting your mortgage. Now, as I said, you're going to look at your deposit, your income, and you're also going to be looking at your credit rating or your credit profile. So a great strategy for increasing your income is looking at the things that you can do, the skills that you have, or maybe some services that you can offer people. So make sure that you're looking and being creative in the things that you can do to increase your income. I know a lot of people who have side hustles and do various different things, but they're doing cash in hand. So they may have an additional income coming in, but because it's not registering anywhere, when they go to apply for a mortgage and they're saying, oh, well, I do this particular thing, the bank has no way of verifying that additional income. So that's not going to help them. But you want to look at ways of increasing your income. The other thing is increasing your deposit. You want to increase your deposit because the more you pay down, the less the bank is lending you. And that's going to impact what's called the LTV, or loan to valuation. Loan to valuation. I do have a video on loan to valuation and explaining the implications of loan to valuation when it comes to not only your mortgage interest rate, but being able to get the very best mortgage deals. I'd also suggest that you think outside the box. Quite often we're thinking, or we go into a conversation with a broker and we have one thing in mind, because we've seen something on social media. Always speak to a broker. Always speak to a broker. Always be open and honest with the broker. Always explain your circumstances and the outcomes that you're trying to achieve. There are specialist lenders out there that will work with you regardless of your situation. This week, I was really excited. I had a client who was convinced that they wouldn't be able to get a mortgage. I was able to match them with a lender that looked at their circumstances, not just through an automated underwriting process, but actually looked at them as an individual and was able to get them a mortgage. As I said, my name is Anthony Lindsay. There will be information in the description. There's a QR code right here if you want to book an appointment. There is no fee for a conversation. So we're going to continue by talking about how mortgages work in the UK, how your credit score can impact the type of mortgage that you get. A lot of people that watch my channel are first-time buyers. So they're the people that need the most support. And those are the people that I love to work with because they come in and they're open to the conversation. And the reality is 47% of people in the UK do not understand how mortgages work. And that's even people with mortgages. But first-time buyers come in knowing that they don't know what they don't know. So it's a great conversation to have. I would say always, always, always speak to a mortgage broker. Going to your bank is going to only give you one option. So I often have clients that approach me and say, oh, I can't get a mortgage. And I'll say, why do you believe you can't get a mortgage? And they say, because my bank said I can't get a mortgage. Now, if you've gone to one bank and asked that one question about your profile and they're unable to lend to you, maybe because you're on a skilled worker visa, maybe because of credit issues, because of the size of your deposit, just because that bank cannot lend to you, it doesn't mean that no bank can lend to you. So you want to approach a broker. A broker is going to give you choice. A broker is going to give you service. And a broker will talk to you about one of the most important parts of taking out your mortgage, which is protection. So you can have a mortgage and run into some issues, and they will have put something in place that can protect you in the event of death of a partner, you're off work due to sickness, you contract a critical illness. So the great thing about speaking to a broker, they'll give you that full package, as opposed to when you go to the bank, quite often you're not going to get that advised sale. There is a perfect profile for a customer. We very rarely come across these people. And these tend to be the people that will go directly to the bank because they know that they are the perfect profile. It's still not the best bet for them to go to the bank. But what does this person look like? It's someone with a UK passport. It's someone that is full-time employed, PAYE, meaning they have a fixed contract with a guaranteed income. So it's not a 0 hours contract. It means that even if they're off work sick, each month they get the same amount. So PAYE, employed for more than 12 months, meaning they're not on probation. They haven't changed jobs recently. The other part of it would be a high salary, a good credit rating, and a large deposit. So that's the ideal or perfect profile. You don't come across those people very regularly. So this conversation isn't about those people. It's about people that maybe have had some credit issues and therefore need a lender who's going to take that into account and still do a mortgage for them. The first stage of the home buying process or the mortgage process will be a conversation with a broker. When you go to the broker, as I said, you're going to need to be open and honest. I've been doing finance for over 30 years. So I can have a conversation and I can put the pieces together and figure things out. And if I can do that, the bank can definitely do that. Do not try to fool the broker or fool the bank. Algorithms and banking systems and all the information that banks have available to them is going to help them fill in the blanks. A bank would rather you go to them and say, well, I've had a missed payment, or I have this credit card, I had a divorce and it caused some issues with my finances. Because quite often when I look at someone's credit report, I'm able to pretty much figure out what's going on. Because when you look at someone's credit report, you can see how they manage their finances. So I had a client the other day who the credit report that I was looking at was all green, meaning everything was paid on time, everything was paid well. And I saw a blip where maybe a year and a half ago, there was a missed payment. And going back to what we were saying about credit score versus credit profile, the fact that they had a missed payment within the last 24 months, some lenders are going to look at that and may not approve that mortgage, as harsh as that might sound. But when I asked the person, they said, I was away and the country that I was in, I couldn't log in to make my payment. And it made sense looking at everything else. And here's a tip about your credit. You can, based on a solid credit rating like that or credit profile like that, in many cases, you can contact the lender and say, look at my overall profile. I've never missed a payment. I've been with you guys for 2 years, 3 years, 5 years. I missed one payment. Can you, as a goodwill gesture, update the credit report to show that payment was not missed? Now, they can do that as a goodwill gesture. They won't always do it, but they can do it. You don't have anything to lose by asking for that. Credit reporting agencies are only going to look at what's on there, but the lender does have the opportunity and they do have the ability to correct things on the credit file if you make a request. So first part, you're going to go and see a mortgage broker. You're going to be open and honest. The key documents that you're going to need when you go and see your mortgage broker. So the key documents you need when you go to see a mortgage broker will be 3 months bank statements. So the last 3 months, not 3 random months, 3 months bank statements, 3 month pay slips. If you're self-employed, you're probably going to need your SA 302, as well as your tax overviews. So SA 302 plus the tax overviews. If you're employed, it'll be last 3 months pay slips. If you're paid weekly or monthly, then they all have to add up to 3 months. My name is Anthony Lindsay, and I'm here to answer your questions. So if you'd like to book an appointment with me, you can use the QR code. You can read the information in the description, and you can get in contact with me. Consultations are free. I love working with complex cases, so people who maybe have had some credit bumps, people who are first-time buyers, people who are on skilled worker visas, people who are self-employed or contractors, all of that weird and wonderful stuff. The straightforward, high income, UK passport, high deposit, those people are great people too, but I love being able to help people who didn't think that they would be able to get a mortgage. I'm launching something that hopefully many of the people that watch this will find very valuable. I'm launching something called the Mortgage Ready Challenge. The Mortgage Ready Challenge is for anybody who's planning on purchasing a home within the next 6 months. So the idea is, as of the airing of this video, you'll be mortgage ready by summer, that you can be in your new home by next Christmas. So that's the Mortgage Ready Challenge. The benefits of the Mortgage Ready Challenge are A, we will get you in a position to get you the very best mortgage based on your circumstances within the next 3 to 4 months. So we'll help you clean up your credit, we'll help you increase your income, and we'll give you some tips on how to increase your deposit. The Mortgage Ready Challenge will also enable you to have lower broker fees. So if you come back to me within the next 6 months and I do a mortgage for you that goes to a full mortgage offer, you'll get 50% off my broker fees. You'll also be a part of our private group that we support each other. It's a business networking group where we'll help you if you're looking to do a side hustle, if you're looking to generate some additional funds, if you need support in building your website or getting your business out there or finding clients, you'll be able to do that. You'll get additional resources. We'll have some training on some property strategies because let's face it, people often feel that they have to get a mortgage because they have to own, because they feel that everyone should own a home. Having a mortgage and owning a home is not right for everybody. There are some downsides to owning. So keep in mind when you own your home, unlike renting, when you're renting and you have a leak or something goes wrong, you call the landlord. When you own, you're responsible for that. So there's additional expenses that come along with owning your home. So we have courses that we go through other property strategies. You'll have access to those courses. You'll have access to credit tips. You'll have access to just a ton of information. So the goal of the Mortgage Ready Challenge is not only to get you mortgage ready by summer, that you can be in your new home by Christmas, but the other point of the Mortgage Ready Challenge is to increase your income, decrease your outgoings, and build up a bigger deposit that you can get the very best mortgage. My name is Anthony Lindsay, and I hope to speak to each of you at some point. I appreciate all of your time, and I appreciate you tuning in. Make sure you look at the description in the information in the description. All my links are there. I'm on LinkedIn, I'm on social media, and I'm here to help you. So if you have a first-time buyer question, if you have a credit question, if you just want to speak to someone that's going to give you honest advice on how to buy your home, remortgage, do a buy to let, make sure that you reach out.